All right. Good afternoon, everyone. Well, it's afternoon here on the East Coast USA anyway. So hopefully you've got great weather like we do here. And thanks for taking time out of your busy schedules to be with us this afternoon. Again, afternoon here in Charlotte. Welcome to this webcast titled How to Thrive in a Trader's Market. Definitely a timely webcast. I'm sure a lot of folks are scratching their heads these days. So let's get right in here and tell you what we do to make sense of this turbulent market that we've been in. So you're in the right place right now if you currently dedicate or want to dedicate a portion of your portfolio to short-term trading to grow your portfolio faster. So let's define short-term. We're not talking about intraday trading, although we do some of that. The predominant trading type that we feature in this particular technique is going to be what would be termed swing trading. So we're talking days to weeks, essentially, with the bulk of our trading. We do some position trades from time to time, and we do some intraday trading, but 95% of the trades would be what you would classify as swing trades. You're also in the right place if you want to feel confident in your decision that you bought the right stocks at the right time, and more importantly, that you can sell them at the right time in the future. And so hopefully that qualifies you. Then you're in the right place at the right time, and I can give you this promise. I can promise you that if you stick to what we teach you here in this room here today, that you can adapt and thrive no matter what the market throws at you. My name is Steve Chappell. I am the Director of Trading Systems Development here at a company called VectorVest. I'm sure most of you are already VectorVest folk, but we also do have a good bit of outsiders that are typically in the room. So welcome one and all, whether you've been with VectorVest for 10 or more years or whether you're seeing VectorVest for the very first time. It's my privilege to be in front of you here today. I've been with VectorVest for 20 years, going on 21. It's been quite a ride and an exciting ride at that. So learned a lot over the years as well. I am just a small part of a very, very well-qualified team, and we all we all really take pride in delivering the best stock market guidance you can get anywhere at any price. And so today will be no exception, since the bulk of what you're going to be doing today is free. So we're going to over-deliver today, I think. All right, so what are we going to need to make this happen, right? So you're going to need the right tools, ultimately. You need the right tools for the job so that you can adapt and therefore thrive in any market condition. So as with anything, it always comes down to the right tools. The best example I can always give of that is with hardware tools, because everyone can relate. So I had recently sold a house, bought a new one a couple years ago, had a huge deck, with major staircase, the whole bit. Got out there with the belt sander, and said, boy, I'm going to try to knock this thing out today. Got about 20 minutes into it and a couple stairs later, and I said, this isn't going to work. So I went down to the store, got the belt, the drum sander, and I finished that rather large top deck in 20 minutes, and it would have taken me, I don't know, a couple days with the old belt sander. And it reminded me of when I was a kid and was doing some side jobs with friends, helping out some older brothers and things that were working jobs with that old belt sander. Those things break all the time, and you got to replace the belts, and it's just a mess. That belt sander did the job quick. So it's like anything. You need the right tools for the job to get the job done. And so we're going to be talking about the right tools in this webcast. All right. Oops. If you guys weren't seeing the screen, sorry, it was coming through on YouTube, not coming through on GoToWebinar. So you should have the slides now. All right, so here's just a couple recent examples of using the right tools at the right time and getting the right result. Okay. This is a sneak peek at what we're actually going to get into the software, and I am going to show you around, but this is kind of a screen capture from the right tools. So this is what we call the Derby. It resides in our overall program. It does come at an additional expense. We'll talk more about that later. There is a very special price, for having attended the webcast today, where you can test drive it. So it's a really low price. Not even worth mentioning, really. That's how low the price is. So don't let any of that scare you off. ultimately, we're going to give you 30 days to try it out, and you can decide if it's going to be worth keeping. And most folks, that sets them up for for a lifetime. So what we have here is a screen capture of a product called the Derby, and what it does is it takes all the different stock selection techniques that we have in VectorVest, and it ranks them out. So we call it the Derby because it's modeled after the spirit of a horse race, in that it's always long been our methodology anyway, that what we want to do when the market is rising is jump on the stocks that are rising with the market. Not only rising with the market, but the leaders. So the stocks that are making the biggest moves in the market. And so this tool does that for us very quickly. And what you're looking at here is a situation where all of our market timing, and we'll talk about how we got that timing here in a bit, was telling us that it was time to go bottom fishing. And lo and behold, the second place strategy that day was called jailbreak, which has long been at VectorVest the best bottom fishing strategy that we have. So it's not unusual when it's time to go bottom fishing to witness jailbreak rise to the top of this Derby list. And before the end of the day, it did get all the way there. But ultimately, what it did was allow us to pick these stocks and then produce these kinds of results. So in just a couple of days, this basket of, so this would have started during the middle of that day and then continued on for 2 further days, produced 9% in just a couple of days, okay? 2.5 days to be exact. And it was the very next day that the market gave us a opposing signal, and it was time to shut the campaign down and move on to another campaign again in the future. And so this is the same exact process. This one is in March. The other one was in January. And this is of 2022. And these are times where we actually went long because everything's set up appropriately to go long. So this particular campaign here went on about 7 or 8 days. And in this particular case, we were able to get up, actually at one point, I think we were north of 24% on this campaign, and we locked down about 18. So I maintained the spirit of the true performance here. It did go a little bit higher over the next couple of days and then eventually dipped off, but this is when I took the screenshot. So you might see some familiar names. That little AEHR at the top there is actually a very interesting looking stock even right now today. And so there might be some names in some of these grids that are familiar to you. What I want to do now is get you over into the product, show you around, and show you what we do on a daily basis. So today, for example, we were getting ready to load up the truck again and potentially go long in a big way. And we'll talk about why. But what we see on the homepage here is VectorVest the color guard is somewhat bullish. VectorVest advocates buying safe, undervalued stocks rising in price. And more importantly, for us, in this particular environment, in the trend column, there's 4 letters. So you see in this case, it's up, up. What we like to do is trade in congruence with the first 2 letters under just about any condition. So there's always an exception to the rule. That's the 1% of the time kind of a deal. But 99% of the time, we're trading congruent with the primary wave. Okay, so the primary wave has been up. We had that interesting Fed day where we took a little bit of risk off, not knowing what would happen around that Fed day. And kind of interesting that we did, and it ended up being a good call, I think, because there was really no change from what the Fed has been telling us, other than they may even have to go higher than they anticipated. Of course, he said that 2 straight instances in a row now, and just because his delivery changed, for some reason, folks thought, well, the Fed is beginning to crack for some reason. So anyway, long story short, we were heavily thinking about contra ETFs, other than the Fed meeting was kind of looming there, and we figured, well, let's wait, let this thing shake out here a little bit more, and see if this double top on the stock market is actually going to hold or not. Of course, as good as I do at this point, market took off right up through that double top at this point, and the market's trying to push higher. So we were gearing up to go long today, and that's congruent with what the primary wave direction is. But here's where it gets kind of interesting and maybe pretty eye-opening for some. If I come over to this Derby tool, Down here in the bottom left, you have this Derby timing indicator. And what prevented us from going long today, I think really with any, I'm not sure if Glenn bought anything this morning or not, but I know we didn't go for the gusto because if we look at this, and I know he was, I could hear him in the room from time to time. I try to monitor it as best I can through the walls sometimes. But anyway, the green's kind of just coming down and the red's coming up all morning after the open. And so the red is bearish, the green is bullish. And so what you have here is actually a transition into bearishness pretty early on in the session today. So you opened up fairly bullish, but that didn't hold. And what we like to do is we like to get at least 15 minutes behind us on just about every occasion, unless for some reason the market is just ripping in a specific direction, which today that was not the case. It started to rip down, basically. So between 9:45 and 10 o'clock is where we like to really get serious about sort of placing our bets for the day, if you want to think of it that way. But, it's more sophisticated than that. And so today was a day actually to think about potentially going on the short side of things. And that may provide a tremendous amount of benefit actually for the days to come, depending on how the stock market ultimately ends up performing. But let me just show you the last 5 days, because this is just today, right? Then you get a better feel for things. So if we go back to the 25th, which I think was the day after Thanksgiving, right? If I can keep my memory intact, that market actually pushed higher that day, right? And this thing was bullish all day long. What did the market do on the 28th, on this Monday? It went down, right? This thing would have had you not buying stocks, to be sure, and featuring potentially short-sided or bearish positions in the stock market if it was okay to do so. That goes back to the primary wave. We don't like to trade against the primary wave, okay? When at all possible. Some days they just become so obvious that with this tool that you might intraday trade and really do some good work for yourself. So we'll talk about that and how you're going to know whether that is, like today would have been one of those days or not. But you can just follow this graphic and then see there's a lot of wisdom in that graphic, in that there really hasn't been a terrific day to do much of anything this past week other than late in the afternoon after the Fed meeting, which is always a gamble, or on the short side earlier in the week. Everything else has been pretty docile throughout this entire week. So we've been doing a lot of just kind of cherry picking, doing some trades here and there off and on, and not doing any heavy lifting this week, because of that. Okay. But when this indicator gets above 1.2, either the red line or the green line, you're starting to get clearance that it's okay to play that direction. But remember, we want the primary wave to be congruent. And the primary wave has been up all week. So, even barring that one instance where it kind of flipped temporarily one day. What it's done this week, by and large, is keep us out of trouble. For the most part, just keep us out of trouble this week, which is fine. Now, when we get over to look at the Derby tool and take another pass through, I think before I do, I want to just kind of prove that, this methodology works a little bit. I'm going to go to this tool here called RoboTrader. We actually do live trading with this information every single day in front of customers. So they see what stocks we pick, when we pick them, what prices we get, and ultimately when we sell them in the future. We got a little fun trade in there right now that we've held on for a little while called XRO. It's up 92%. This is real time, real commissions through Ally Invest, okay? We've done about 14% in this portfolio since we reset it. That's from the middle of September. So that's pretty handsome returns, honestly. Most folks probably aren't doing that well since just September. You saw earlier, we had instances this year where we did just 20% in a couple of days. So, when the iron's hot, we do even a lot better. And if you're wondering why we might have to switch out from one fully recorded campaign that just permanently goes on. We just end up trading too many stocks. And so we, we have a lot of fun, and everybody's coming to the Jockey Club every single day. And so we always have to give folks good ideas every day that we can. And so we just end up having to create another portfolio because we've run out of room or whatever the case is. So that's that. We've gone short several times throughout the last several months and managed some gains on the short side. I think Patrick's doing trading for charity. The main theme here you see is green, green, green. Okay. Everything's green. And it should be. So one of our main overarching goals is we want to grow these accounts month after month, year after year. That's an impossible task, but I'm happy to report that we generally grow these portfolios 8 or 9 months out of the year, month over month. So that's doing pretty well, honestly. So, that's about as good as we've ever been able to do anyway. So maybe that's not good for some. I don't know. If you've been trading for 20 years, it's pretty good. So that's that. Now back to how we pick some of these things. So if I go back to the Derby, this is the full look at the tool now. Okay. So what are these green bars and what is all this stuff, right? So the green bars are names of strategies. And so instantly I can see then what the best strategy in VectorVest was today. Market's done. The cool thing about this tool is I could have looked at the landscape of things at 10 o'clock this morning and made some decisions. And so the spirit of it is usually the strategies that come out of the gate hot finish very well for the day. So, this marijuana stocks portfolio, for example, at 10 o'clock this morning was already up 2.89%. It finished up 4.9% today. So what we like to do is we like to either trade the whole basket if the conditions are right. Remember, today was kind of a soft day, right? So you could have gotten away with it, but the conditions weren't perfect to get that kind of result. So we like to get everything lined up as good as possible. And when that happens, if today was a stronger market day, this portfolio probably would have done better because there would have been more participation and so on and so forth. But having said that, you can hopefully find some merit in what we're talking about here because it takes all of the strategies in VectorVest at any given moment throughout the day. You can then see, what strategy and thereby what 10 stock baskets are leading the charge. So today looks like a day for the marijuana stocks. Also, we said we kind of had a bearish bias on the stock market today. Well, what do we see here? We see worst performing contra ETFs. So I think what happened is the market just didn't get sour enough where around the time Glenn was looking around 10 o'clock to where he felt like pulling the trigger in a big way on these contras today. But, if we followed the DTI and would have pulled, let's look at the DTI here again. So the DTI went above. Yeah, so it literally looks like he should have, by the time you get to 10:30. That's when we get off our webcast. We're going to talk more about that here in a little bit. It was only about 10:15, and where he was probably already trying to kind of wrap things up for the day. But the tool is saying, hey, here, you could have had some opportunity around then. So 10:15, right? So if I come in here and look at 10:15, what you're going to find is you probably couldn't have gotten that whole 2.73% in a day, right? With slippage and everything. Good thing is there's no commissions anymore, right? So that makes slippage a little bit more palatable. So maybe there was opportunity here for about 1% or so before the close today, but that's 1% in one day. That's pretty solid considering what did the market do today? Well, if we go to a market timing graph, it's not like we missed a bunch because it's a doji. Okay, the market was on a doji today, and I just showed you a way where mechanically through everything that I said throughout the webcast, right? There would have been a potential to think about that. The other reason Glenn wouldn't have done that, though, as I go back to our initial statement, is we're still in an up. So the primary wave has to turn down for us to get really into a position where we'd want to go full bore with those contras. So in a nutshell, Glenn did exactly what he should do, and that's a whole bunch of nothing. Okay. But what I wanted to do is try to somehow impress upon you the kind of potential that's there. And that's the only way that I could have done that. All right. So when is the primary wave going to switch? All right. That might start to become a question. Well, right now, price the composite is 56.98. Week ago's price is 56.12. As we get into tomorrow, it's 56.25. So there's about a 73-cent cushion on the primary wave staying up right now. So we will walk into tomorrow looking for long positions again, unless the DTI stays the way it is, which is bearish. Then we will not do any long trades, and we will wait until price goes below a week ago's price, which could happen, I guess, earlier into next week if it doesn't happen tomorrow. See, there's a pretty big drop off on the 28th data. So that likely keeps the primary wave up if it doesn't switch down tomorrow. We'll see. Right. So that just kind of tells the story there too. I mean, the market needs to really shake itself out here. Even that 700-point day on the Dow didn't do a whole lot of favors in terms of busting through resistance. In fact, it looks like what's going to happen here is, you see this was the double top I was talking about earlier, potential. That's no longer valid. And what was resistance now becomes support. So it feels at least like this market is going to want to retest that level before it heats up again. Okay. Is what this current sort of candle structure and everything would indicate to me. So the good news is we've come back and filled these gaps. We really did that on the first of the two swing highs that first formed the potential double top. You can see that fill up through there. Now we've kind of pushed through that level. Your next resistance level really isn't till about 58.15. But the question becomes, is support going to hold to get us there, right? So we're kind of on the lookout for that right now. And so this is the kind of market guidance you're going to get in this room. We're always looking at the current market situation and what that means in terms of the landscape of whether we want to be bullish or bearish and why, and what we see, and therefore what you can see. Okay. So what we have is a pretty good situation in that this market wants to climb. They're willing to bite on any scrap of good news, even if it's really not, even if they're manufacturing it, it seems, on the back of the Fed meeting, right? But what's likely to happen here, it looks like, after today, is a retest of that area before it either hits up or, of course, falls back through. And what we really need to do is let that shake out. And so all the data that we see right now is leading us that direction. So you have a primary wave up, but you had an intraday down, right? So that's mixed signal. So the only way that we will go do anything tomorrow is if it's up, right? Because we just said, you're likely going to have a primary wave up at least early in the day tomorrow. But as we get into next week, there's a possibility we could go short if this market doesn't get going again, right? And then we would look at contra ETFs or short positions. On the other hand, if this market does heat up, we're going to be, so we go with the flow, okay? And that's how we do it. Hopefully I feel like I'm kind of a little rough shot today, but it's systematic. That's the main thing I want to get across. We have a system, and we do not violate it. And so these are the things that we look at, and we look at multiple time frame for double confirmation on everything that we do. And so in order for us to trade long, we need to be up on the primary wave and up on the DTI. In order for us to go short, we need to be down on the primary wave and down on the DTI. There's always a rare exception. Those generally come on the back of some kind of economic news or, something like that, where the market starts to landslide or rip, in advance of change in signal, where we know we've still got the green light to go. And that comes down to the coaching. All right, but 99% of the time, it's just doing what we said. All right, we'll go back over the Derby. It also gives you some good insight as to what kinds of strategies, are on the move. So what kinds of stocks? So we talked about how marijuana stocks had a big day today. We also said contra ETFs actually were next best. So that kind of tells you the tug of war that's going on in the stock market right now. Sector peak short. So you got a lot of short strategies mixed in here with the long. So it just wasn't a good day to go long today. Okay. I wish I had a better day to work with, but it is what it is. And, some days the best thing to do is do nothing. I mean, that's the reality. And I want you to know that we're comfortable in our own skin. And if that's the case, then that's what we're going to tell you. Now, the other thing that's really cool about this Derby tool is there's these different modes of analysis. So everything that we're doing right now is just looking solely at today. However, this can be a terrific research tool for you. And in fact, I'm going to do some of that for you right now. So if you want to know what one of the most consistent strategies in VectorVest is on the long side, you can do that by clicking on this thing called vary the start date. Okay, so it's like running an experiment. What we're going to do here is we're going to take all 200 strategies roughly that are in this tool. I think there's 187 or whatever it is. And we're going to take all those strategies and we're going to look at the performance, not just on today, but from any day in the past up to 3 months ago. So there's this calendar here and we can go back. So one thing that you could do, if I want to know what the strongest, most consistent strategy is in VectorVest from the most recent bottom, I can go here to timing, market timing graph. I can get the bottom, right, which is right here. That's the low, right, 1013. All right, so I can come back into the tool. I can go to 1013. And I can only look at long searches. All right, so actually, one of the best buy and hold strategy from any day since the market bottom is marijuana stocks. So not only was it the best strategy today, well, if you would have bought them on 1013, 9 out of the 10 stocks went up, 37% return, okay, with a drawdown of 8. If we would have bought them the next day, could be 10 different stocks that day. Usually there's some overlap. Depends on the strategy. If it's a price and volume strategy, the turnover could be all 10. If it's a high relative safety strategy or a high market capitalization strategy or something like that, there's not going to be very much turnover. It's probably the same stocks day after day and everything in between, right? But with marijuana stocks here, we can see the next day 29%, the next day 31, the next day 23, 27, 32, 30, and all the way up to, are they still making money over the last week? Well, yeah, they're 5%, 3%. So from any day that you would have been buying marijuana stocks recently, you would have been making money. Do you think that information can be useful? Because I do. So, now probably don't want to go buying 10 marijuana stocks for your retirement portfolio, right? But if you've got, $20,000, $10,000 set aside for some, what I might call even a fun money account, right? They can do you a lot of good, right? It depends on you and your objectives and what stage in life you're in and all those different factors. I know guys who run 5 or 6 different portfolios. I run 3. I have a retirement portfolio, I have an options portfolio, and I have a trading portfolio, right? And I allocate them appropriately. Bulk of my money is in retirement. Smaller denomination in trading and a smaller denomination even yet in options. And when I make enough, I roll some of that back over into retirement, right? So, and you just keep balancing those pots. So, don't think that this isn't something that you can do because it's marijuana stocks, right? Or small caps, right? So you got the S&P 400 mid cap has actually been the next best arena to be playing in. And you might say, well, that's great now, but that's already done. Well, you can go back a week and, what were they on the 4th? Marijuana stocks. So you could have known this information last week. What was number 2? S&P 400 mid cap. What was number 3? China. What was number 4? Mini rockets. Let's go back to where we are now. Oops, I might have used the wrong date. I don't know. But you get the idea. Let's see here. October 13th was that one. So we'll go back to the 27th. Marijuana stocks at the top, right? 12-1. Go back. Go back. Go back. Go back. Marijuana stocks was number 2. S&P 400 mid cap was number 1. So sorry I did that backwards first time through. But, the point being, you could have had this information a week ago and done well this week. And guess what? I mean, if you're thinking the party is over, well, it wasn't over for the last week. So why is it over for the next week? Right? Now, the only caveat there is the market dynamic might change, right? We might switch from an uptrend to a downtrend. And in that case, what we're going to be doing is, instead of looking at bullish searches, we'll look at bearish searches. Okay, which one should I favor when the market turns over? And so right now, maybe something like, I don't like stocks to sell short, so I'd go to worst stocks over 10. It's one of the staples of VectorVest program. It's VectorVest basic on how to short stocks. Worst stocks over 10 or worst stocks over 20 are my 2 favorite searches in VectorVest. So I'm not surprised to see one of them up there, number 1. It looks for the worst stocks out of 9,000 that VectorVest tracks, right? And gives you the top 10 of those stocks. So the ones that have the worst overall fundamentals, the ones that have the worst price patterns, everything, all into a single stock selection of 10 stocks. And you say, all right, well, that might be the one that I'd want to key on to go short. If you can't go short, contra ETFs are always an option. I mean, the only thing you got to get right with contra ETFs is market direction. Once you get into the leverage, things get a little bit, we'll talk more about that, at a different time, actually. But contras can do you good if you can't go short. Or I'll tell you what can do you some good if you can't go short is just being in cash. So if it's your trading account, right? If you're in retirement account, you can be using options and things like that. So we're talking about the trading side of things in this room. I want that to be clear. Okay. So from there, you can also do a lot of other fun stuff. Like if you want to desensitize market direction, you can use something like this. We like to refer to this from time to time. This is called sliding window. So what sliding window does is, I'm going to use all the data here. Actually, no, let's use it from October because everybody's talking about, do I want to buy stocks right now? And if I do, what stocks do I want to buy? So I'll give you some answers. I'm cool with that. You took time out of your busy schedule to be here. All right. So who's at the top? S&P 400 mid cap. We saw that in another list, right? But this is a different method of analysis. What else do we see near the top? Marijuana stocks. Those are 2 really good options right now, okay, and have been. Why is this test different, and how can that be of benefit? Okay, so we can go back up to 3 months worth of data. That's going to be at your discretion. I'm going back to the bottom just to show you what's moving from the bottom, okay? Every test is only 5 days now, so it's not holding it all the way to today. And what that does is take out a little bit of the directional bias of the stock market. This isn't a great example because for the last month or so, the stock market has had a lot more up days than down days. But some of the down days have been pretty egregious. And so what you are going to find here are the strategies that have been the most resilient. So instead of which ones have produced the most return, having bought them at any date in the past, now you're looking at which ones have been the most resilient over any given week. Even if I started and the market went down that week, it's factoring that performance into the result. So you're going to have a lot more runs that are negative because you might have bought at the worst time possible on a given week and sold at the worst time possible on a given week. If you're with me? So it's kind of like an acid test. So you're basically saying, well, whether I had just 5 straight up days or 5 straight down days or a mix in between, what strategies did the best? Well, it still happens to be S&P 400 mid cap or marijuana stocks. I mean, that's all roads, and romancing the MPM, all roads are kind of leading back to those same strategy selections. And so then the idea is, you could use this as certainly for your trading account, as a building block for where I want to find my stocks, because what it's telling you is, since the bottom, no matter how you want to slice and dice the data, that's where you want it to be, because we've got everything in here. We've got blue chips. We've got high growth stocks. We've got MACD crossovers. We've got all of that stuff. Okay. And those two things have been the two things that are always at the top of the list, no matter how you do it. Make sense? I hope it does. And that's a lot more scientific approach than saying, well, MACD always has tended to work and really well, and so it should work really well right now. Well, it's not working as well as those two things. So, you with me? All right. So that's how cool the Derby is. I mean, it's really a fascinating tool, and that's how we do so well. Is this thing ultimately gives us the right things to pull, the right pond to go fishing in. And if you get the right pond to go fishing in, then it's just a matter of, do you catch some of the big fish or not? And we don't always catch the big fish, but we're always catching fish. That's the thing. Sometimes they're big, like you just saw a 92% trade, right? Sometimes they're not so big, and sometimes we lose. In fact, I venture to guess we lose more than we win. I haven't looked at that in a while. But generally speaking, I can tell you in my own personal trading account, I got about a 44% win rate over the last 15 years, right? But at the same time, I've had years where that portfolio has gone up more than 270% in a year, okay? So it's, it's going to put you in the right pond to go fishing. Some of the fish are going to be really big. Some of the fish are going to be really small. Some of the fish you're going to wish you threw back. Right? But the ones that are really big outweigh the ones that you wanted to throw back, and the really small ones really keep you moving the right direction. So that's the way it works. Hopefully that analogy works for you guys. First time I've used that one, but it really does depict the spirit of what we do. Our big winners far outweigh any of our losers. And that's how you keep moving the needle. You got to let your winners run, right? And you got to cut your losers early. We cut some losers this week. And, hindsight's always 20/20. I think we would have wished we still had some of those, right? But, hindsight's always perfect. That's the way it goes. All right. So I don't know if there's going to be any questions. We'll see. But in a nutshell, that's what we do, guys. So we get in a room every week. It's called the Jockey Club. And we do this analysis in real time in front of you guys, the customers. And you guys then can decide, number one, boy, this is cool. I'm learning a lot and I can do this on my own. Okay. B, boy, I want to watch these guys continue to work, shake things down for a little bit, see how well they do, right? And maybe I want to start doing the same thing for myself. And so that's how we've built up the room. We started this room 7 years ago, and I got people in the room today that were there day one, and they're not going anywhere ever. So it's a tremendous community. We get together every day. It's one-way conversation. However, there is a chat. They do talk to us. We do talk back and forth via that kind of interaction. And so it's really cool because sometimes some of those veterans will give us some stocks that we ought to look at, that they see moving, that we haven't caught on to yet. And, there's a lot of education that happens back and forth between the participants and the coach, which is a cool dynamic. It's really cool. So a lot of times we'll look at your stocks, see what VectorVest has to say about them, and give you that kind of information as well. So it's a really comprehensive room. You get to see us do campaigns where we buy 10 stocks at a time. You get to see us cherry pick, where we just pick 1 or 2 stocks a day, several days in a row until a campaign needs to be shut down, and everything in between. So tremendous learning environment for one and all. I'm just going to wrap things up. I feel like I've been dawdling here a little bit, but I'm really trying to give you the spirit of what we do as best I can. Okay. Some months are better than others for that. It just depends on kind of what our performance and what our current situation is. A lot of times I'm loaded up to the hilt with stocks. Right now, we've only really got the one, I think. But anyway, today you've learned how to keep the wind at your back on your short-term trades. You've also learned a stress-free way to evolve with the changing market conditions. So what do we use? We use the tool. I mean, there's no stress. The tool does all the work. All we do is we then just pick some of the ones whose charts look the best from those top performing strategies, and we buy them. And it's really that simple. We use Profit Locker to manage our trades, and we generally run about a 15 gain, 15 loss, 50 gain, right? 50 gain, 15 loss, or a 28 gain, 7 loss, depending on what we're doing. If we're trading triple leverage, we're not going to use 28.7. You'll get bounced out on noise, right? So it just kind of depends on what we're doing, but we always talk about what our stops are going to be, and on every trade and all that fun stuff as well. It is stress-free. There's no such thing as you can't do this. You can do it if you want to. The only thing I can't do is make you want to do it. So this is literally for people who want to do the kind of thing we're talking about. You want to go get involved in a community that's going to be looking at these tools every day. We're going to open VectorVest. We're going to say, all right, here's what VectorVest is saying, right? Primary wave is up. We need to be thinking about buying stocks today. We're going to go to the Derby. We're going to monitor this tool throughout the morning. We're going to say, all right, yep, we've got enough evidence that it's okay. The coast is clear to go long. We're going to go long. We're going to come in here to top Derby strategy. We're going to say, all right, let's look at a couple of these things. Grow Generation happens to be my favorite marijuana stock. If you guys have been around VectorVest long enough, you would know that. All right, but here's GRWG. And boy, I tell you, it had a pretty strong day all day today and was breaking through resistance. This would have been on my short list today for sure, for two reasons. One, I made a lot of money with Grow Generation back here, right? And if marijuana legislation moves in any real way, these guys are they're like the Home Depot of marijuana, of growing anything. Doesn't even have to be marijuana, okay? They're a brick and mortar solution, a lot like, say, a Home Depot or a Lowe's. You just go in, they give you everything you need, you go out, you're done. But anyway, three good volume days. This is 3 white nights. So that's another pattern that's very bullish, actually. And you also are coming off of a flag. So here I go. See, I got back into training mode again. So if you're wondering if the party's over, it's not. You're maybe half the way there. GRWG looks like a good pick in that space right now. JUPW still kind of flagging off there. This isn't really a flag pattern, though. More of just a retracement. That one's at resistance. That one's trying to break through. Yeah, GRWG would have been my pick today for the reasons mentioned. And it's always the same. So if anybody's in this room that's in the Jockey Club, they'd be like, yep, he's telling you the truth, because I like to buy these breakouts, okay, when they're breaking through prior swing high resistance. If they're just shy of it, I don't touch it. So I'm very interested in this one right now. All right, so anyway, a little freebie. Now, that's only if the market continues higher. Even though marijuana stocks sometimes don't care. All right, come on, Steve, get it back. All right, so you can adapt and thrive no matter what the market throws at you, particularly if you have a good coach and the right tools. So how do I get a good coach and the right tools? You get involved in what's called the Jockey Club. We get together every morning, 9 a.m. We stay together till 10:30. And those coaches will be Glenn Tompkins, Patrick France, or myself. I am Monday, Wednesday. Patrick's Tuesday. Glenn is Thursday, Friday of most weeks. And then sometimes you get a heavy dose of me or a heavy dose of Glenn or a heavy dose of Patrick, just kind of depending on responsibilities. But you get 3 of VectorVest's best traders in this room. and you get that for $29 for a month. So, it's a can't pass up offer in my opinion. I just showed you a whole lot of technique that I didn't even know I was going to. Did it on the fly for you because that's what we do. I mean, it's in our blood, okay? So $29, you're going to get that kind of guidance, but not just like 2 minutes of it. You're going to get an hour and a half of it every day on a lot of stocks every single day. Every single day. Is that worth $29 to you? Mama me. If it's not, I don't know. I don't know. I can't help you. If it's not, I can't help you. I want to help you. So all you got to do is get in this room. All you got to do is go to this offer here. I'm going to put it out into the chat. www.vectorvest.com/thrive. For those of you that are on YouTube, sorry I can't send you a link, but you guys know how to get there. Just go to vectorvest.com/thrive. I'm going to be one of your coaches. I know most of you know Glenn Tompkins. He's our YouTube sensation. Patrick France, VectorVest Mobile. All three of us run this room, okay, and we love it. Patrick, more of our intraday day trader. I'm the old curmudgeon who still likes to trade for days to weeks. And I think Glenn's probably more on my side of things, but a whole different character unto himself. So you get a nice mix of personalities as well, which is a lot of fun. We have a lot of fun. All right, I'm gonna see if there's any questions. Again, for $29. I mean, look, here's the deal. After the 30 days, let me go ahead and show you what the rest of the offer page looks like. Come on, guys. There it is. $29. Let's see here. It's going to be $249 a month or $25.90 a year. Okay. So here's what I tell folks. If in 30 days we can't show you how to make a year's worth of the Derby in that month, don't continue. If we can't show you how you could have made $3,000 in the first month, don't continue. It's that simple. I don't care what month it is. If we can't show you how to make $3,000 that month, don't continue. Now, look, we don't tell you exactly what to do. What we do is we show you what we're doing. It's up to you guys to make those observations and do what you like, right? But if you see value in the coaching, or if you see that you can produce significant profit by being a part of this community, then you continue. If you don't, you don't. It's that simple. There's no, the cool thing about this is rubber meets the road. We're in there trading with real dollars and real accounts. This isn't like fantasy land, right? It's a real bona fide trading room with real trades with real money. All right, with the holidays coming up and limited time available, can this offer be extended until January? We do this once a month, so just be on the lookout for the next Thrive webcast. So yes, in essence, yes, you can wait till the next time around. Or you could get in this room and maybe Christmas gets a whole lot easier. But yeah, you could definitely wait. You could definitely wait if you want. Is Profit Locker included? So Profit Locker Pro is not included. Profit Locker everybody has. So we don't use Profit Locker Pro for that reason. We just use Profit Locker that everybody has. Yes, it's part of it. So you get VectorVest Real Time, you get the Derby, and you get Profit Locker, which is part of Real Time. Part of the base platform. So you get everything you need. All the other stuff that's on the website, don't read through all that stuff. I showed you everything that you're going to need today. You don't even need RoboTrader. You just need to know what the top strategies are, what the stocks are that look the best. Is the time right? That's what you need to know. Everything else is, not nearly as important. Let's see. Will you teach us how to use Profit Locker? Of course. I mean, we're we're not going to like dedicate a whole session to it or anything, because we've got people that have been in the room for 7 years and they already know, right? So, but what we can do is, if you ask us, hey, we can spend enough time to where you should feel fairly comfortable with it. Since we're kind of in the Q&A period right now, and I'm feeling generous, I'll show it to you now. People ask questions, I like to answer them. Okay, so what I'm going to do is go in here, and you can see, well, it says Profit Locker Pro, but it's really not. I'll show you why. It's going to confuse folks. I didn't want to do that. You can see in this current arrangement, we're using 28.7 for the bulk of the trades. Okay, now that's no different. I know it says Pro, but that's no different than Profit Locker 28.7. It's the same one. We didn't make any changes. So I could just use this one. Oops. Why wasn't it taking that? So there it is. So it's the same parabola, right? So this is how Profit Locker works. You see this black line? That assumes linear price progression. Why does it do that? So that we can show the integrity of the parabola of the stop loss. Okay, you have to do it. You have to draw linear price progression so that you see how the stop is affected as price hits certain dollar intervals over time, or 10-cent intervals, if you will, right? And so what you have is an initial trail. Once profitability is achieved, you're going to hold a break even. After enough profit to started to accrue, then you're going to start ratcheting up, and the closer you get towards your target, the faster that ratchet ensues. So it's very sexy, right? In that we're trying to get to profitability. Once we get there, we're trying to hold on to it, but give things a little bit of room, right? And then as we get close to our target, that's when we really start to try to lock things in. Make sense? Now, if you're trading something that's triple leveraged, you want to at least broaden out to something more like, this one. I don't know why that thing's so sensitive for me right now. But this is, so when I watch just watch the red here. I'm on 50-15 right now, right? If I continue to take that target higher, notice how much bigger this belly is getting over the course of time to give even. So there's kind of a balancing act here then, right? Of what kind of percentages do I want to use, so on. Now, having said all this, there are times where we trade with moving averages, and there are times where we trade based upon a candle pattern that has developed on a trade that we have. So there are things that can supersede and intervene here too, right? So a lot like if you have ever heard, say, Linda Bradford Radschke or Larry Connors or any of the bigger professional traders that do a lot of education, nobody uses a singular stop loss. So it's this or primary wave change, or massive bearish candle pattern, or so other things can get in the way. But assuming nothing gets in the way, then this is the guide. So this is like your initial guide on the trades. Make sense? All right, hopefully it does. All right, let's see. So hopefully that helped, Sai. All right, any final questions, guys? Now's your chance. Look, all that kind of education, for $29. All that education for just $29. That's crazy, right? I mean, I gave you more than $29 worth just here, and I really wasn't teaching anything. So, all right, guys, we'll see you soon. Hopefully we'll see you in the Jockey Club tomorrow. If you get signed up now, there's a good chance we can get the orders through. You'll get your email invitations to the group this evening or tomorrow morning, and we can get you in that group by 9 a.m. But the longer you wait, the bigger risk you run. But if not, we'll catch you next week, whatever the case may be. And once you get in there, we'll do our best to keep you on board. That's what we do. Otherwise, we wouldn't have been doing this for 7 years. And we'll be doing it for 7 more. I'll see you guys soon. See you soon, guys. Good luck out there. Take advantage of this offer. Let us help you out. We can get the job done for you. Okay. See you soon. Gotta go.